All right, so it's 10:35. We'll start here. Once again, good morning, everybody. Thanks for joining. I have your attendance so far if you are on the call, and I'm sure we'll have a few other people join as time progresses. Uh, I wanted to say one thing about the names of which company you're going to research. Thank you to the 10 people who have already contacted me to give your names of your companies. I've tried to respond to most of you, but I may have overlooked responding, but I have everybody's information. At this time, there's only one more space left for Netflix and only one more space left for Apple. So remember, it's first come, first serve with a maximum of 4 students per company. So if you already know which company you're going to choose, you should email me sometime over the course of the class over the course of today, because today is the deadline by which you need to tell me for the term research paper the name of the company that you think you're going to research. I don't want you to put it in the chat right now. I may not be able to keep track of what's going on in the chat. So just email me, tell me which company you want to research. And if you did email me and I didn't get back to you, Emdadol, and you just told me that you didn't hear from me, just check in, but I'm trying to respond to the emails as they come in. But I'm sure, like many of you, I'm receiving dozens of emails a day. So it's possible that I'm reading someone's email and making a note of the company and not remembering to respond to them. Okay, so that's the story with the term research paper. Remember, it's only about 4 to 6 pages of research that you're doing. You're just choosing a company and answering questions related to that company. And let me go in here now and share my screen. Another bit of, I guess we'll call it admin, that I want to share with you. And I sent this out just before class started because I wanted to be sure that if people don't hear me saying this in class, that or if you can't write stuff down and so on, you've got the record over here of this information. Our class is online, synchronous, so the vaccination situation doesn't really apply to our class in the sense that we're not going to be meeting in person, but you may have other classes that where this applies, and in general, it may just be to your benefit to do this now, because in the spring, more classes are moving to in-person, and in order to take classes and register for classes and so on, there's a vaccination requirement. So, I'm not opening a discussion around vaccinations or anything like that. Please don't take this in any way about me saying what you should or shouldn't be doing in terms of vaccination. That's a public health situation. I'm talking about people who have already been vaccinated or who want to be vaccinated so that they can attend in-person classes. Your deadline to upload your vaccination documents is September the 27th, which is literally next week, Monday. So I'm hoping that if you are in a class that is either marked as hybrid or in-person, obviously, all those classes are currently running online. I'm sure everybody knows that. If not, I'll repeat, you may be registered for classes that are marked as hybrid or in person. And if that's the case, by October 7th, some of those classes may be going to actually meet in person. And if you don't have your vaccination documents uploaded into the system by September the 27th, you may run into a situation where you get dropped from your classes, because this is not a LaGuardia rule. This is not an Andrea Francis rule. This is not a business and technology department rule. This is coming from the CUNY central office that is requiring all the campuses to make sure that students who are coming onto campus after the date of October the 7th, on or after October the 7th, are in fact fully vaccinated. So if you don't want to get dropped off of your classes, which I'm sure nobody does, especially many of you might be like in your final semester or something, right? So please make sure that you whatever documentation you have, whether it be the CDC card, or which is probably the most likely documentation that you have, or some type of note from your doctor, that you are uploading this information by September the 27th. Again, it's this coming Monday. If you are stuck and you are not sure how to upload this, please note that all this information is under the announcements tab in our classes Blackboard. There's asynchronous support, which means you can just watch a video. It's going to show you how to gather the necessary documentation and then how to upload the vaccination documents. And then if you are not feeling comfortable to just watch a video, you actually want a person to help you, there are open labs via Zoom on Monday, Tuesday, Wednesday, and Thursday. So even today at 2:15 after the Reg hour with Raphael, you can go and join the Zoom where a student technology mentor will help you to upload your vaccination documents. Again, we are getting to the end of the road for this to be done, because by Monday, the 27th is the deadline. So you have Wednesday, Thursday, and then next week, Monday, if you want to join synchronous remote support where an actual person is helping you to do it. And the other option, if you are somewhere close to campus or something, you can actually go to the Bursar lab at C111 in the C building between 9 to 5, Tuesdays, Wednesdays, and Fridays, and you see a 9 to 7 Mondays and Thursdays, and they will help you to upload the documentation as well, but you will first have to email them at this email address to make sure that you can actually show up there. And if you have questions around the vaccination situation, you can go to this webpage to look up more information. If you are not yet vaccinated and you want to be able to still attend classes, after October the 7th, what I've read and has been shared by the president of the college, which is obviously coming again from CUNY, is that you would then have to have had the one-shot dose of Johnson & Johnson by September the 23rd, which is literally tomorrow. So I'm not, this is, again, this conversation is frankly not really even applicable to our class because we are online synchronous. We are not ever going onto campus. So please don't be alarmed and think that because you're in my class, you have to do this. I'm just trying to help you guys in case you are, look at your schedule, okay? If you are in a class that is marked as hybrid or in person, if any of your other classes are hybrid or in person, that means that by September the 27th, if you have not uploaded vaccination documentation to prove that you are in fact vaccinated, CUNY Central has reserved the right to drop students from their courses, which would be catastrophic for you, obviously, at any point, but especially if it's your final semester, and also would be completely unnecessary if you are in fact vaccinated, but you just did not upload the documents. So guys, please make sure, if you haven't done this already, do it. If you need like big time help, go onto these Zoom calls where people will walk you through how to do it. If you think you know what's happening and you just need a little bit of support, there's a video that can show you how to do it. If you want to go in person, you can, but frankly, remember, there's probably going to be a whole heap of people who need help also. So if you can find help through one of these other methods, like today after the Reg hour, maybe you have a few minutes, you can join the Zoom call and try to get this done. Does anybody have questions for me about what I just spoke about? Any questions about the uploading the vaccination document?
I do. So what happens if you lose the paper like I did?
Sorry, I didn't quite catch that.
What happens if you lose the vaccination paper?
Oh, from the CDC, you mean?
Yes, they give you a paper after that.
I don't think that's really such a problem if I'm understanding correctly. When I did the there's this thing called the Excelsior Pass in New York, where you can actually get this pass that you can do on your phone. and it shows people, you can just open the app on your phone and it shows that you are actually vaccinated. All you need for that pass, all I needed was my name, my date of birth, and I believe it was the date of my second, because I got Moderna, the date of my second dose, and they were actually able to pull up the information. I do have the card, but I didn't actually need the card to get my vaccine, I guess, proof via Excelsior.
What is the call again? Website? What's the
Yeah. So let me look on my phone. Yeah, I'll put it in the chat. The name of the thing. I can't remember if it's spelled EXC or if it's just EXE. I don't want to give you the wrong name. Just hang on. It's called, like, it's pronounced the Excelsior Pass, but I'm not sure what the. I don't even know where on my phone it is. Oh yeah. I don't know if you can see this. Let me. I'm gonna open. It's EXC. Let me type it in the chat. Okay, that's probably the easiest. Oh yes, thanks, Madeline. So it's NYS Excelsior, and you can actually go onto the Play Store or the Apple store and look for the proper, obviously, like, legit app. It ends up looking like this when you're finished. Sorry, I've got the green screen. When you're finished with all the information, and I didn't actually need to give a picture of the CDC card. If you can still remember, maybe you put it on your phone or something, the date of your shot or your second shot, depending on which vaccine you got, you would be able to register with Excelsior Pass. So that at least that means that you're in the database. You are definitely, I mean, I can guarantee you're not the only person who lost that card. I mean, the fact that they even thought it was a good idea to use some flimsy piece of paper card, still boggles my mind. But
I know, right? Yeah, like
but I guess everybody was doing their best in the midst of a pandemic, but I still think they could have done a little bit better. So feel free to go on this remote support if you can. I know you may have to go to work or something. I'll keep that question. I have a department meeting today, and I'm going to ask in the department meeting what what the school is doing for students who don't have the piece of paper, and I'll get back to you via email if I get a decent response. Okay.
all right, thank you so much.
You're welcome. Anything else? Yeah, you can also go to any NYC vaccine hub. Oh, great. There, Mdadul. I mean, I don't know if guys have the time, but thank you, Jelari. You can go to a vaccine hub and ask for another copy. So maybe there's a vaccine hub close to your house, or something. That's another option. So we have options. What we don't have is time. Okay, that's the crux. If you are in a completely online situation for the semester and you don't have any classes that are supposed to meet in person or that are hybrid, you basically don't really have this time crunch. You're okay because you're not going to get thrown out of your class, but you have to check your schedule because sometimes it's not so obvious that something is hybrid. If it's hybrid and you didn't upload your documentation, your class will be dropped. That's what CUNY Central said. So, if it's better. Okay, the Excelsior Pass, yes, it does have an expiration date, Cora, but let's be clear, the biggest issue right now is that people's classes shouldn't be dropped come October 7th. So even though Excelsior expires, if you go onto Excelsior, you're going to get like a 6 months or more of that pass, which is important because you want to prove to the school by September the 27th that you are vaccinated. So you can always go afterwards and upload, get a copy of the little white flimsy card and upload that. But I just want to be clear, we're on an extreme time crunch. There's less than a week for people. By Monday, the 27th of September at midnight, I guess it doesn't say a time, but I'm assuming at midnight, the doors close. If you didn't upload any type of vaccination information, CUNY basically can tell you then at that point that you are not going to be able to attend your in-person classes, which will move from online to in-person. Again, that doesn't apply to our class. And there's a lot of confusion also on campus around some of the stuff. Like, does it really mean that people will be dropped from their classes? I understand how that sounds and so on. I'm telling you what the latest information is. They could email us next week and say something else, and that won't mean that what I'm saying today is not true. It will just mean that they are changing policies and adjusting policies and making things, I don't want to say making things up, but making adjustments as we go along. So if you have more questions on this, feel free to even contact me if I can help. I don't want to see anybody lose financial aid, lose their classes, not be able to graduate, or whatever the case may be. If you are not yet vaccinated and you are willing to be vaccinated, or you want to be vaccinated, the word from the president of the college is that you need to receive the single shot Johnson & Johnson by September the 23rd, so that you can be counted into the vaccination pool by the 27th. All right. So that means that between today and tomorrow, you have to find a location that is issuing the Johnson & Johnson shot, and you would be able to then upload proof of vaccination by the 27th. So I'm sorry for those who already did all of this, that you're probably like, can we just get to the good stuff with the inventory? I get it, but it doesn't help anybody if a whole heap of students get dropped from classes, because it's going to throw the entire college into disarray. And this is not something that LaGuardia can control. This is something that CUNY will control. So your stuff goes into CUNY first, because it's CUNY Central that's checking to see if people are vaccinated or not. All right, if there are other questions, put them in the chat. I can try to answer them as we go along. Maybe you come up with something. All right, so you guys did a good job. Personal bio for the most part. People wrote it up on Monday. There may be one or two people who did not do it, and that's kind of normal, unfortunately, despite the many reminders. So we have kind of, not really that much going on in terms of things that are due until October the 4th. And then we'll suddenly realize, right, by next Monday, the Chapter 8 homework will be due in a week. So please, be mindful of that. I just want to also remind you that you do need to register for McGraw-Hill Connect and buy the online access. Just going to the student view, what you guys would see, here's the homework, right, that I set up for chapter 8 and 9 are there so long. These readings for chapter 8, they're not graded by me in the sense that they're not weighted into your final grade, but they're there to help you to, but to help you to understand the material. If you want to read the actual textbook, the textbook should be appearing, right, on the left-hand side of your screen when you go into Connect. And if you want to read the textbook while you are offline, you can download the Connect mobile app, and you would be able to then read the textbook that way. Mdadul, do you have a question for me?
You haven't put any assignment, right, in the Connect? Because when I log into Connect, it says no assignment until 7 days.
No,
I
what?
mean, no assignment are due in next 7 days.
Yeah, that's right. Because but you should still be seeing you should still be seeing the homework. Some people have
But
already been.
sorry, I don't see anything in here in my way.
Okay, so let's handle that at the end, because somebody else was having some problems with their Connect. So I said we can share screens. I'm not sure why you're not seeing the assignments, because like there are people in this class who have already been working on the assignments. So I'm a little bit confused about why you wouldn't be seeing the assignments at all. Little, go ahead.
Sorry. Also, there's an option to buy like $90. Is there will we get a full access if we buy the $90 one?
Yeah, I mean, let's look at what you are. We looked at the $90 one at the end of class last time, and it was Connect Access. And this is the same question that Marina had just now. Let's look at it all together because I guess it's possible that you're in some type of uh, I guess limited access or something. I can't speak fully, having not seen what you're looking at. The $90 one, that's the link that that I put on Blackboard under textbook information because a few of your classmates used the $90 option to purchase. But I did have a question from one person about that. So why don't we even just do it I'll give a 10-minute break around maybe 11:30 or something. Then you guys can just show me what you're seeing, Marina and Emdadol, and maybe that will help the rest of the class as well. Is that okay, Emdadol?
Yes, yeah.
Okay. I know that one person, and I'm trying to see if that person is actually in the class right now. Let me see. Yeah, Jaron, are you there? Are you on the call, Jaron? I see your name, but I just want.
Yes,
Yeah,
Professor.
so you've been in to connect and you've also been able to access the homework, correct?
Yeah.
Yeah, that's what I thought. Okay, so I mean, I know that's a sample of one, but the point is the homework is there and I see the student view, the homework is published. So I think I'll have to troubleshoot individually with you, Emdadol, and with Marina to try and figure out what it is that is causing the issue for you guys. Everybody else, you should be trying to gain connect access by today is the deadline. So you still have a few hours to try and figure this out. What I'll do with Emdadol and Marina during the break is just make sure that we all understand what the questions are because maybe other people would have the same questions as you gain access. So thanks, Emdadol, for bringing that up. Let's keep the question until the break. So to make sure that I am not missing out anything else that I want to tell you. All right. I put a link. I can't remember if I said this the last time. I did put the link for the lecture recordings. There's a playlist for our class where you can subscribe to the playlist, and so it would notify you every time a new video is posted. It would be the same lectures that you guys are listening to now anyway. So I mean, unless you missed the class or something, it might not be something that's super needed. What I will say is I also have posted some videos that I made some time back about inventory, FIFO, LIFO average cost calculations, the example on goods in transit and consignment goods, dollar value, LIFO, and inventory errors. Those are all just specific videos that relate to these topics. You're not under any obligation to watch all of this stuff. It's more just if you feel like you missed something that I said in the class and you don't feel like watching the whole, class video again, or trying to figure it out, or you need some additional support, it is there. And then the last thing that I'll say about, I guess admin type stuff, today at 1 after the class is the reg hour. It's happening on Zoom. This is the information. I will also paste it into the chat. Attendance is required if you have already created if you've already created an e-portfolio before at some point in LaGuardia, you will likely be using the same one and updating it for various things to do with career, academics, transfer, and so on. If you haven't created an e-portfolio before, that's fine. Raphael will take you today through the process of doing that. If you want to know what you guys are going to be doing in this class day by day, I kind of discussed that already on the first day of class, but you also have the syllabus for that reg hour over here that you can use to guide you through your time with him. All right, so he is facilitating the studio hour, but I am grading the work that you are doing in the studio hour. So I am still very much involved with that. Okay, so that's some time spent on admin, and we will go back now into where we left off last week. Again, we're doing the initial measurement of inventory. Last week specifically, we were talking about which items to include in an end of year inventory count and which items to leave out, right? So the physical units included in inventory are the ones that we actually counted in the warehouse, in all of the stores and so on. When I used to audit with Deloitte in South Africa, where I'm from, I used to work in financial services. So the inventory counts were actually money at the banks. So that was exciting, right? Going into these vaults and seeing all this money sitting there. But it could be anything. If you're working at CVS or Walgreens or whatever, the inventory is all the different items that exist there. If you're working at Chipotle or something like that, the inventory is all the food and drinks that are on hand at the end of the year and so on. So we do a physical count of things that are in the warehouse, things that are in the stores, and then we come up with an amount, right? A dollar amount of inventory using cost flow assumptions like Fifo, Lifo, average cost. Because when we are counting the inventory, we're counting units of inventory, not necessarily dollar amounts. I mean, obviously, if you're counting cash, that's different. But if you imagine counting, if you're at Walgreens, you're just counting, how many bottles of shampoo, how many bars of soap, and so on, and then a price is assigned to those things afterwards. So we have that number, and then we have to consider whether anything is in transit, because if stuff is on a truck somewhere, on a plane somewhere, and so on, it may or may not belong to us. So how do we know? And I kind of went over this, and we'll start the example here in a second. You go by the shipping terms, right? Excuse me, you go by the shipping terms, and depending on who is the buyer or the seller and what the shipping terms are, it will tell you whether you should include the inventory or not, right? So there's you are counting inventory for your company. So let's say you're Walgreens, you're counting inventory for Walgreens. Walgreens could either be the seller because they're selling to a customer, or they could be the buyer because they're buying from a supplier, right? And both of those two transactions would involve inventory. So when we are doing these questions, trying to see whether whether an amount should go into inventory or not, we have to ask ourselves, are we the buyer or the seller? Right? And then once we've established whether we are the buyer or the seller, we then have to determine whether whether the terms of the sale are FOB shipping point or FOB destination. If the term is FOB shipping point, then the buyer owns the inventory while it is in transit. If the term is FOB destination, then the seller owns the inventory, right, while it is in transit. So that's why it's important to first establish whether you are the buyer or the seller, because if you don't know which one you are, then it doesn't matter if you know that the stuff is FOB shipping point or destination, you're still not going to know whether it belongs to you or not. So should it be included or excluded? And then the last piece that we that's relevant for the next example that we're going to do, we discussed that sometimes there are goods on consignment. So that, I gave the example of like a wedding dress or some type of posh outfit that maybe someone wants to sell on, but they can't sell it in their personal capacity. So they give it to a store. The store keeps it and says maybe, okay, I'll keep it for like 3 months. And if I sell it, then you can get 70% and I'll keep 30%. And if I don't sell it after 3 months, you have to take it back, right? Because I don't have enough space on my racks to keep your stuff forever. So in the case of that consignment, the person, let's say it's me, if I'm sending a dress to the store, the dress still belongs to me for the 3 months that it hangs in the store, unless it gets sold. So if I'm doing an inventory count, I have to include it in my inventory. And why does it belong to me? Because the risks and rewards of ownership are still lying with me, right? Because the store is not taking it from me and saying we own it now. They're saying we will try to sell it for you, but if we don't sell it, you got to take it back. So I still keep all the risks and rewards. So with that being said, let's go and look at question 2. So now if you're confused about what I'm using for my questions, I put everything everything that I'm looking at, I put under Zoom notes and examples. The select class examples is the document that has the questions that we're looking at. The notes is where all the theory is. And then here I've put also all the solutions. So if people want to work ahead, you're welcome to. The document that I'm using to do all the calculations I had put there before, it's just a Google Doc, this one, so you guys can follow along if you want to, or you can create your own document. So everything that you need to participate in the class, for every chapter, I'm just going to put under notes and examples so that everybody is kind of on the same wavelength as to where the stuff is. So looking at this example, it's going to be an inventory example, specifically trying to see what number, dollar amount should be inventory at the end of the period. So sometimes when you're faced with a very long question, especially in accounting, accounting is often, the tests and things are often very time pressured, like it's time sensitive. You don't have a lot of time to finish everything, especially if you go for the CPA exam and so on. You can't, waste time. So sometimes it's actually wise to read the instructions or the question before you even start reading, the facts or the narrative, because you guys know this already, but I'll just repeat the way our brains work. If we read the question first in our subconscious, it already is going to start trying to help us to fit the information that we are reading over here into, the answer to the question. So it says here, based on the above information, calculate the amount that should appear on a lever's balance sheet at December 31, 2020 for inventory. So I already know, now that I've read it, that I'm trying to get to a dollar amount for inventory. And probably this question is going to give me different scenarios, asking me whether these amounts should or should not be included in inventory. So here it says, in your audit of Jose Oliva Company, remember I told you that auditing is what companies do. They get appointed by the stockholders of, let's say, well, in this case, Jose Oliva Company stockholders appointed us as auditors. So we're the BTA 202 audit firm, right? And we're coming in, and while Jose Oliva's employees are counting inventory as the auditors, we are checking to see, sometimes on a sample basis, whether the amounts that they are including in inventory are in fact correct. Or not, as we would say, materially misstated, right? And the purpose of an audit is not to find fraud or to find, just any old error. It's really to find issues with amounts, like big amounts. So we're auditing. Some of you will end up at audit firms. You might end up at some of the big four audit firms. You find that physical inventory on December 31, 2020, so that's the year end. That's the, the balance sheet date when we want to establish ending inventory for. It showed that merchandise, so merchandise and inventory are the same word. It means the same thing, with a cost of 441,000 was on hand on that date. Okay, so that means that was already counted. That's what's in the warehouse. That's what's in the stores. That's what we think the number should be, right? However, we then, and on hand, right, it's like it's in your hand. That's what you have. You also discover the following items were all excluded. So the excluded is very important to watch out for here. Because if you don't read the question properly, you might not realize that everything was left out and think that maybe some of these things were put in, or, or not know what the company did. Okay, so important to read the question thoroughly before you just jump in and start saying, yes, put it in, put it out, whatever. So the following were excluded from the 441,000. So the way I would do this question is I'm going to go to, my sheet here, this Google Doc where I'm doing the work, and you guys can log into the Google Doc and follow, or just follow on the screen. So at December 31, right? Oops. At December 31, 2020, we have on hand, right, 441,000. And now what we know is we're going to have to go through and see if that number needs any adjustment. Okay. So yeah, this was excluded. So we have to see whether it was correctly excluded or whether it should have been included. Merchandise of 61,000, which is held by Oliva on consignment, right? That was excluded. The consignor is the Max Suzuki company. So can I get someone to raise a hand for me to tell us if you think that this amount should be excluded from Oliva's inventory or included? Now is the time to test to see if anybody was actually listening, right? 50-50 odds of getting it right. Someone raise a hand and tell me if you think that items that are on consignment at Oliva but coming from Max Suzuki should be included or excluded from Oliva's inventory.
Included.
All right, so we have a taker for included. So I'm going to say that it should be excluded. But I want you to tell me why you think, I know now I've said the answer, but I want you to tell me why you think it should be included. Or were you just taking a guess, which is also
Yes.
okay. All right, so we got to go back to the theory, right? And remember what it said about goods on consignment.
Can
Yeah.
I told why is excluded?
Yeah, go ahead. I like participation, so go ahead. Speak to me.
So I think that
I can't hear you. Oh, you're still thinking, sorry. Mhm.
so when they left the sales and therefore a sales and retail cost of goods sold should be recorded in 2014.
I don't understand we're talking about consignment. Make it simpler. Make your answers. The answer should be simpler. Who does the inventory belong to? Let's read the question again. The merchandise is held by Oliva on consignment. The consignor is the Max Suzuki company. Madeline, your hand was up and then it quickly disappeared. But I wonder if you wanted to say something.
I think what the person was previously trying to say is like you mentioned before that the property, well, the stuff is still like you still own it technically.
Okay. Okay, so maybe you're saying that what Jaren was trying to say was that it should still be in the inventory of the person or the company that owns it. Am I following you guys? Okay, so perfect. Thank you. So let's look again at the theory and see. So Jaren, Madeline helped also to explain a little bit more what you were saying. Sorry if I couldn't understand you initially. So when items are on consignment, they remain the property of the consignor and are included in the consignor's inventory. And so consignor means that whoever sent the stuff to be sold somewhere. In this case, it says that the consignor is Max Suzuki, right? We are not the consignor. Remember, we're at Oliva. So Oliva is holding something on behalf of Max Suzuki. The inventory still belongs to Max Suzuki. So the inventory belongs to Suzuki. So exclude, okay? That's because Suzuki is the consignor. So it's not simple. You have to kind of picture what's the scenario here, right? Who's sending the inventory? Max Suzuki. Who's receiving the inventory? Oliva. The inventory does not belong to Oliva. We are doing the count for Oliva, so it should be excluded, right? And it has been excluded. So remember everything was already excluded. So you don't need to subtract it from the 441,000. You just need to do nothing because this number was already excluded before. Please don't subtract. That would be wrong because you would be double counting the exclusion. Questions there or confusions or, people saying I'm now giving up on ever understanding consignment. All right. If the question had said that Oliver was the consignor and sent inventory to Max Suzuki, then we would include. To Emdadul's point about including, when I was asking him, why did he say include? The scenario that would give you an inclusion is if Oliver was the consignor and they sent the stuff to Max Suzuki, that inventory still belongs to him. So the trick with consignment that might be a little bit weird is that you are including items in your inventory that are not physically present at your company, right? So you have to always remember that there might be something out there on consignment that isn't on your premises, but it actually does belong to you. Okay, number 2, merchandise costing $38,000, which was shipped by Oliver. So if the merchandise is shipped by Oliver, is Oliver the buyer or the seller? Can someone raise a hand and tell me if I'm shipping it, if it's shipped by Oliver, is Oliver the buyer or the seller?
The seller, no?
Yes. It's not a trick question. You're the seller. And why I'm asking that is because remember, in order to understand whether the stuff belongs to us, if we see FOB destination or FOB shipping point, we need to first understand whether the company is the buyer or the seller. So something shipped by Oliver, FOB destination to a customer on December 31, 2020. So on the last day of the year, Oliver shipped something out to a customer. The customer was expected to receive the merchandise on January the 6th, 2021. So the first question is Oliver the buyer or the seller? They are the seller, right? Per Madeline, she's correct. The next question is, what are the shipping terms? The shipping terms are FOB destination. So I'm going to write it over here, right? The first question is, are we the buyer or the seller? The second question is, what are the shipping terms? Then you're going to ask, based on the shipping terms, should we include or exclude the amount from inventory? So if you go through the process like that, you should be able to come out to the correct answer. So we're the seller. What are the shipping terms? FOB destination. If it's FOB destination, the seller owns the goods while they are in transit. We are the seller, which means we need to include these items, right, in our inventory. And so what did we do though? We excluded them. So that was wrong. So the 38,000 needs to be added back. So inventory belongs to Oliver, and you've got 38,000. So already we found an error, right? That there's 38,000 worth of inventory that should have been included that was not included. Okay, number 3, merchandise costing 46,000, which was shipped by Oliver. So again, we see that they are the seller. FOB shipping point, there's the shipping terms, to a customer on December 29, 2020. The customer was scheduled to receive the merchandise on January the 2nd, 2021. So we're the seller. The terms are FOB shipping point. Now we have to remind ourselves, for FOB shipping point, the buyer owns the goods while they are in transit. And which date do we care about that we're crossing over? We're crossing over December the 31st, which is the date when we are counting inventory. So on December the 31st, there's inventory somewhere on a truck or a ship or whatever that does not belong to us. It belongs to the customer based on the FOB rules. FOB shipping point, the customer, right? The buyer is the same as the customer. The buyer owns the goods and we are the seller. So we should have excluded it. We did exclude it. So we don't have to do anything because we say inventory belongs to the customer. And so no adjustment needed because it should be excluded and we already excluded it. You don't need to subtract it. All right. Questions up to there? Anybody? Okay. So I'll push on for 4 and 5. Merchandise costing 83,000 shipped by a vendor. A vendor is someone who's selling to us, right? So we are now not the seller, we're the buyer. Okay, so it's shipped by a vendor. We're the buyer. FOB destination on December the 30th and received by Oliva on January the 4th, 2021. So we again cross over the date of December 31st when we are doing the inventory count. So we want to know on December 31st, when those items are on a truck somewhere in the country, who does the inventory belong to? Well, who am I? I am the buyer. What are the shipping terms? It's FOB destination. When it's FOB destination, the seller owns the goods while they are in transit. So I should exclude them from my inventory count. I did exclude them from my inventory count, so no adjustment necessary because the inventory belongs to the vendor. On December 31st, the inventory belongs to the vendor because we have not yet received it. We were only going to receive it on January the 4th, which is after our year already ended. So we should not include it in our inventory count. And then the last one, merchandise costing 51,000, again, shipped by a vendor. So we are the buyer. FOB shipping point. So the shipping terms have changed, right? FOB shipping point on December the 31st, 2020, the date when we're doing our count, and received by Oliva on January the 5th, 2021. So we're the buyer, the terms are FOB shipping point. FOB shipping point, the buyer owns the goods while they are in transit, which means the goods belong to us. We should have included it, but we did not include it. We excluded it, so now we have to add it back. So the inventory belongs to Oliva, and that is for 51,000. So we found another error, right? So you're the auditor here, and you're finding that the company made some mistakes. Now, whether those mistakes end up, being material depends on other numbers in, on the financial statements. But I mean, if you look at the number that we started with, right, 441,000, and you look at the total of the errors that were found as 89,000, that's a pretty big percentage of the original number. So probably the auditors will ask the company to make the adjustment to show that that 530,000 is actually the true balance for inventory. Okay, and when the inventory balance goes up now at the end of the year, I'm going to write it over here so you can see what's the impact, right? So inventory is a current asset, you know that already, right? Oops. So the increase in inventory increases assets on the balance sheet, obviously, right? Because it went from 441,000 to 530,000. So the balance sheet looks a little bit better. But what also happens is this increase, this wasn't requested in the question, but I want, you guys are going to become seasoned accountants, so you need to know what the impact is, not just for the dollar amount, but also on the financials. So the increase in ending inventory, this is obviously ending inventory because we're counting it at the end of the period, right? Will cause cost of goods sold to decrease and net income to increase. So how do we know that, right? How do we know that? There's a formula that I showed you. It's in the textbook and it's also in the notes. We go back here quickly. It's when we talk about periodic method, right? Beginning inventory plus purchases gives you cost of goods available for sale. The cost of goods available for sale minus ending inventory gives you cost of goods sold. So because there's a minus in front of ending inventory, the cost of goods sold and ending inventory numbers are going to move in opposite directions, right? They're inversely proportional. So they move in opposite directions. So when ending inventory goes up, cost of goods sold goes down, and cost of goods sold is an expense in the income statement. So when that expense goes down, it must mean that net income goes up. So when you're the auditor and you are finding these errors, and eventually the company will probably make the journal entries to adjust their numbers, you are then going to look to see if the inventory on the balance sheet has changed to the correct number, but you also have to make sure that the cost of goods sold has been adjusted by this 89,000 error that you found. And then because cost of goods sold will go down by that amount, net income has to go up as well. Questions on that mouthful of information?
I'm good, Professor.
No
So,
question.
all right. So what do we see with these questions? There's a rhythm to the questions, okay, which is often the case in accounting. The rhythm here was that, you know, they were first the seller and they were testing you for FOB destination, FOB shipping point, you know how to handle it if you're the seller. Then we were the buyer and they did destination and shipping point as the buyer. Okay, so when you see the question for homework, just pick it apart. Okay, I think it's the first question on the chapter 8 homework is Quack company or something, and it's also these like, you know, goods in transit questions. Should the stuff be in inventory? Look for the markers in the question. Am I the buyer? Am I the seller? What are the shipping terms? Were these items included or excluded? And then make your decisions based on that as to whether the item should be included or excluded and whether there's actually an adjustment necessary or not. For a lot of this, for a lot of the accounting questions, eventually you should start seeing, I mean, you guys are accounting majors, so you know, you start seeing a pattern after a while, and the more you practice, the more proficient you become at answering the questions. We'll take a break here until 10:37. And maybe people come up with more questions, you know, about this material. If not, once the break is, well, let's make it 10:30. I mean, not 10, sorry, 11:38. Once the break is over at 11:38, we will move quickly into cost flow assumptions, which is Fifo Lifo average cost calculations. All right, and that's basically what we'll be doing for the rest of this class. And in the next class, I don't know how much, you know, how much time we'll spend this time doing it. I don't think any. So in the next class, we'll move on to dollar value LIFO, which will then still give you enough time because the next class is on the 27th. By then we'll end this chapter. We'll still give you enough time to finish the homework successfully. Okay, so I'll stop talking now so you can take a break until 11:38. The people, Marina and Emdadol, stay if you can, to show me, I'll try to get you to be able to share your screen so that you, if you're comfortable with that, so that you can show me what is going on with your Connect. I'm just going to pause the recording here quickly.
Professor?
Yes, my dear.
Hi, this is Marina. Can I talk right now?
Yes, yes, start the recording and share the screen. All right. So we're not going to spend much time talking about purchase returns and discounts. That's not really something that's a focus of the chapter for us. We're moving straight into inventory cost flow assumptions. So assumptions, right? You should already be seeing this word. That means that this is not a fact. We are just thinking that this is the way in which something is happening. Basically, in this case, in order to make life a little bit easier for us, right? We're assuming a flow of inventory in order to make life easier. So during any given fiscal period, companies typically purchase merchandise at different prices. So, if you're working at Target and you are working in the electronics section where there are all kinds of earphones and things, but it's maybe the same earphones, but they are being purchased at different times of the year, the prices may fluctuate, right, in terms of the cost of the item. The price to the customer may stay the same, but the cost that Target pays could be different for any number of reasons. So now the question becomes, right, if a company is buying all these different items of inventory with all different unit costs, which cost price should it use? Does it have to go back into its records and see every invoice and see, oh, we bought these at this price and that at that price? How long is that going to take? It will probably take forever, right? But we know from our previous discussion that companies do have to physically count inventory at the end of the period, at the end of the year, and that when they count those inventory units, they have to assign dollar amounts to those units because they have to have a dollar amount for ending inventory, right? When you make your financial statements, you don't put the number of units on the balance sheet, you put a dollar amount. So a company could be like doing specific identification and saying, well, I know, that this is, the pair of earphones that I bought on January the 2nd. So this is the cost. And so we'll do it that way. But that will take forever. Imagine a company like Target, how much inventory they have on hand at December 31st. You can't go around looking at every item and trying to match it up to an old invoice to say how much it would have cost. There has to be a better way. Now, if you were dealing with like a luxury car dealership, you're selling your Maybachs, you're selling, all kinds of stuff, or if you're Tesla, maybe, although they have quite a big production line as well, maybe if you're a luxury car dealership or some type of luxury jeweler, you may be able to specifically identify each item sold and each item that is left. But that is really something if you have limited inventory of, a very high value. So there's low number of inventory, but it's very costly and it's easily distinguishable, then you would use specific identification. We don't use that for our purposes because we're dealing with, quote unquote regular companies that are, listed on the stock exchange and so on, that have lots of inventory, often at low prices. They won't be able to specifically identify the cost of each inventory item at the end of the year. So the companies then have options. They can use one of three methods in order to cost out their inventory. And when they do that, they're making an assumption about the flow of inventory over the course of the year or the period, so that they will be able to come up with an ending inventory number and thereby also a cost of goods sold number. So those three methods that they use are average cost, FIFO method, right? First in, first out. We did a little bit on FIFO on Monday, and then the LIFO method, right? The last in is the first out. So again, these are not factual items like, yes, this is definitely what happened with inventory during the year. This is just an assumption of how inventory flowed. And inventory does not actually have to flow in this way in order for you to use the method, right? Your inventory could flow in and out of your store in any way, doesn't matter. You can still use either average cost, FIFO, or LIFO in order to assign a dollar amount to items of ending inventory at the end of the year. So just,
Professor,
yes.
if we do FIFO or LIFO, it's always in the end the balance is always same.
Are you asking me if the balance is the same?
Yes.
No. Let me first also just say, I'm assuming you're talking about the balance of ending inventory, right?
Yeah.
Yeah, so your ending inventory balance will be the same if you use FIFO under perpetual or periodic, it will be the same. But if you use FIFO versus LIFO, it won't be the same. And the reason the ending inventory won't be the same, let me tell you with since you have, right, the first goods purchased or the first goods sold, this means that the inventory remaining is the most recent purchases under FIFO, right? Because the first thing in is the first thing out. So ending inventory under FIFO is going to be the latest purchases, often with a higher price. Whereas with LIFO, right, with LIFO, the ending inventory is, because it's the last thing in, is the first thing out, right? So the last goods that are purchased are the first ones that are sold or used in manufacturing. This must mean that the ending inventory is the oldest, the earliest dates. So unless the price of the inventory is exactly the same throughout the year, which frankly would then mean we don't even need to use FIFO or LIFO, but that would be the only time that the ending inventory amount for FIFO and LIFO would be exactly the same if the price of the inventory never changed throughout the year, the cost.
Oh, okay. Thank you,
All right.
Professor.
No problem. You asked me to already explain how the ending inventory works. So maybe if we just stick it out with FIFO and LIFO, I'll come back to average cost, right? So, FIFO, the first thing in means the first thing that we bought is the first thing out, the first thing that we sold. And so when are you applying this? You're applying it in calculating ending inventory and cost of goods sold. The whole purpose of the inventory of cost flow assumption is to get to an ending inventory number and to get to cost of goods sold numbers. And I said this before, but I'll just repeat, because FIFO is the first thing in is the first thing out, whether you use a periodic or a perpetual system. And we saw this when we did example number 1. Your ending inventory and your cost of goods sold amount is the same, okay? Because the same cost will always be first in and therefore also first out. It doesn't matter how you do it. If you do perpetual, periodic, when you use FIFO, the perpetual and the periodic system will give you the same cost of goods sold and the same ending inventory. And, I'll show you in numbers that this does work if you don't believe me yet. And yeah, they're saying an advantage of FIFO is that ending inventory, because it's the most recent numbers, the cost of ending inventory is more relevant to, and it's closer to current costs, right? And it's, and it's also similar to the actual physical flow of inventory, right? If you think about a supermarket or something, usually the first things that come in, especially for perishable goods, are going to be the first things that are sold. But so ending inventory is usually the most recent purchases, but since the cost of goods sold is the oldest purchases, your revenue and cost of goods sold aren't always matched based on the current prices of things. So now you're like, do I need to remember that or whatever? The purpose of me telling you this is around why a company would choose a particular method, more so than, you being able to recite all the benefits, and so on. With LIFO, the last in is the first out. So ending inventory is going to be things that are left over from long ago. Is that actually the inventory that's left over? No, right? Remember, this is book calculations. You're doing calculations on a piece of paper. I can't go into the supermarket and say, oh, because we're using the LIFO cost flow assumption at the end of the year, I'm going to, hide away the old bags of salad because they have to form part of ending inventory, and we'll only sell the latest bags of salad to people because our physical flow of inventory has to follow the assumption. That's not what we're saying. We're saying business as usual, inventory where people work at Walgreens. I think it was Mdadul who said he works at Walgreens or CVS. Your inventory is flowing however people are buying the stuff. You're not walking around Mdadul and telling someone, no, you can't buy that because we're on LIFO, so you need to buy the last thing that came in, which is still on the truck outside, so you got to wait for it, right? That's not what we're saying. People are shopping, they're doing whatever they want. But at the end of the year, the company is assuming that inventory flowed in a particular way. And that assumption does not have to be the same as what actually happened. They're allowed to make the assumption to make the calculations around ending inventory and cost of goods sold easier. Okay, so I don't want anybody to think that when a company is on LIFO, for instance, that's actually how the goods flow. That's not necessarily the case. Okay, so under LIFO, we will have a different ending inventory and cost of goods sold under perpetual versus periodic method because, and I'll show this to you when we do the calculation, because you're updating your numbers after every purchase. And so the next sale is going to look at the last purchase that was made to get the cost of goods sold. All right. And I did not finish. The average cost is a little bit easier. It just basically says, what's the total dollar amount of all the stuff that was bought, all the inventory that was bought during the year? What's the total number of units related to that dollar amount? It says total cost of goods available for sale divided, right, by the number of units that are available for sale, gives you one number, which is the weighted average cost of the inventory, and you use that number to apply it to the number of units that were sold. That gives you cost of goods sold, and then you also use it to apply it to the number of units left, and that will give you ending inventory. And if you do, that's the periodic method, so this is a little bit easier because you only calculate the number once for weighted average unit cost. Under perpetual, you have to do a moving average method, which means that every time the company buys inventory, you calculate a new average cost of inventory. So you're constantly updating the inventory cost as you go along. All right. So again, all of this will be made clearer when we go into doing an example here in example number 3 in a moment. Any questions on the theoretical side of things before I actually start tackling the example?
Just to make sure, so you said that the consignment, it just means that there's a buyer, seller, and a vendor, right?
Not for consignment. I mean, for consignment, there's a consignor and a consignee. There's the company that gives the items, company A gives the inventory to company B to sell on their behalf. I mean, there is a customer in the sense that company B may sell it to a customer, but if we're looking at inventory, we're assuming that the stuff hasn't been sold yet. So it's really just between the consignor and the consignee. And the inventory belongs to the company that sent it. So in my example, company A, that's the consignor, will still own the inventory, even though it is at the store of company B.
Okay, got it. Thank you.
Okay, no problem. Anything else? All right. So just to give some highlights of comparing the cost flow methods before we go into it. If you were the CFO of a company, chief financial officer, how would you decide which inventory cost flow assumption to use? Which factors might you consider? Could you use a combination of methods? So we often think that the difference between like accounting, real accounting, and just bookkeeping or data entry is that you're actually also part of decision making, right? You're using the numbers in a decision making process. So now that we know, what's happening with FIFO LIFO average cost, maybe it's helpful to think about how people decide or how companies decide to which method they're going to use. With average cost, it's easy for the most part. It's an easy method to use, and the number that you come up with usually falls somewhere between FIFO and LIFO, so it's like literally the average, which means that you're not too high or too low. It's kind of the Goldilocks kind of, like it's just right. Okay, that doesn't mean that average cost is better, because average cost is not very accurate in terms of, especially if prices have changed dramatically over the course of the year. The fact that we're averaging everything out actually means that we're a bit less accurate in terms of what has happened to the prices of inventory over time, right? But it is easier. If prices are going up, FIFO will end up with a lower cost of goods sold, because the things that were sold first would have had a lower price. You have a higher ending inventory, right? So, but because cost of goods sold is lower, you will also have a higher net income, right? So that might be attractive to a company if that's what they're aiming for. Maybe they're thinking that they want to show growth and so on. Can you jump between methods every year? No, you can't. You can't decide, oh, this year I'm feeling a little bit tired, so I'm just going to do average cost. Next year I want my net income to be high, so I'm going to go with FIFO and so on. You can't just change your cost flow assumption. There has to be a very concrete reason why you're doing it, and then you have to explain still in the financial statements why you're doing it and what the numbers would have been if you had stayed on the other method. So you kind of make a choice of what you're going to do, and you stick with it. And also, if you use LIFO, then you unfortunately also have to show what the numbers would have been under FIFO. Okay, so we'll see why someone might use LIFO though. With LIFO, there's a lower ending inventory because it's the earliest units that have, in this case, a lower price that are in ending inventory. You have a higher cost of goods sold, which doesn't sound great, but sometimes companies are trying to save taxes. So they will go with having lower taxable income to lower their taxes, even though everybody knows that this is just an assumption, right? Generally accepted accounting principles allows all three methods. You can use a different method for different inventory items, but you can't change the method, that you're using every year. You do have to disclose which methods you're using. International accounting standards do not allow LIFO, because LIFO basically was seen as a tax dodge, because companies would use LIFO, would use the LIFO methodology and base their tax payments, like for tax reporting, they would use LIFO, but then at one point in the past, they were allowed to use FIFO for accounting, but LIFO for taxes. So eventually, at least, I guess, the rules changed. And if you're using LIFO for taxes, you also have to use LIFO for accounting. Again, a lot of this LIFO popularity has to do with saving taxes. This information was from a few years back, but basically at that point, there was already almost $76 billion that was lost to the federal government because companies chose the LIFO method over, FIFO. And again, LIFO causes lower taxable income and lower taxes because it has a higher cost of goods sold if prices are rising. And this is what I was saying before, that a change from one method to another requires a clear explanation. You can't just jump around and decide one year you want to do one thing and the next year you want to do another. So there is some thought that goes into this. There could also be, you know, manipulation of the financial statements or the tax position of the company, unfortunately, through making these assumptions. So, you know, when you are auditing a company and they suddenly decide to change their method from one to another, you have to make sure that they have valid reasons why they are doing it. You also have to be aware that if you are dealing with a company that, as you know, that is doing international accounting, that they actually don't allow for LIFO. Back in the day when international accounting and generally accepted accounting principles, which is the US accounting, when they were trying to converge and make, I guess, like almost like one global standard, the fact that LIFO isn't allowed under international accounting was one of many, but one big reason why US GAAP, why they didn't want to converge, because they would lose the tax benefits of LIFO, right? So we still find that we have two separate standards. And hopefully, I mean, you guys see this in the textbook, and I can go in next time and point it out that it does sometimes explain how the international accounting standards differ. If you studied accounting in a different country before you came here, like me, you would have studied under international accounting standards. So, you know, some of these things are different. The international accounting standards are a little bit more principles based. The US GAAP is definitely more rules based, following rules as opposed to sometimes applying principles. Any questions before we do an example? All right. So we will go into, let me scroll down here. Okay, so this is the question. Again, all this stuff is under the Zoom, whatever it's called, Zoom notes and materials. This is the question for doing FIFO, LIFO, average cost under periodic and perpetual. Normally the information is presented in some way like this. It might be tabular or in words, hopefully tabular, otherwise it's a little bit difficult to follow. The Browning Company has the following information for 2020, but I'm going to follow my own advice and actually try to see what I'm being asked before I go through all these numbers. Assuming that Browning uses the periodic method, calculate cost of goods sold and ending inventory under FIFO, LIFO average cost, and then assuming that they use the perpetual method. So this is really the only difference between these two questions, right? Assuming that they use the perpetual method, calculate cost of goods sold, etc., under FIFO, LIFO average cost. So going in, you see that there's a January 1, 4,000 units of inventory at $5.50 to give you a total cost of 22,000. Then there's a whole lot of purchases at various prices. You can see the prices are increasing to give us a total cost of goods available for sale of 71,500 and the total units available for sale of 11,000. And then we see that over the course of the year, they sold units in various months for a total number of units sold of 6,500. So who wants to tell us how many units are left? It's probably the easiest question thrown out for the day. How many units are left at the end of the period?
Is it 65,000?
No, that's what was sold. So
Oh.
what is left? How do we figure out what is left? You want to try again? Or someone else can try? Should I try? All right. So 11,000 units available to be sold. Oh, sorry, someone's in the chat, my bad. Not 5,500, but you guys are getting close. Do the math again. 11,000 units to be sold. 6,500 units actually sold.
Also, is it 4,500?
Yes,
4,500.
4,500. 4,500 units are left. Why do we care, right? It's like, so what? Who cares? Remember, the purpose of the exercise is to calculate the dollar amount for ending inventory and the dollar amount for cost of goods sold. Now, you know the number of units sold is 6,500, and you can see when they were sold, but you don't yet know how many units are left because it's not told in the question. So you actually have to calculate that in order to get to an ending inventory number. All right. So I'm going to try and set myself up here. What I'm gonna do is, I think I have this, question somewhere else. I actually just want to copy the grid over so that I don't have to keep going back. I'm just gonna stop the share here for a second and just organize my life, and then I'll bring us right back back to you. All right, so I think we're in a slightly better situation.
Professor, can I still choose Netflix for my
Is this-
research
is this-
topic?
Is this Kevin Ocampo?
Yes.
Yeah, I got your message. Sorry, I kept meaning to tell you verbally that I already put your name down, but I haven't. You may, that's the end of Netflix though, for everybody else, okay? You're
Thank you.
down, Kevin, you're fine. Thanks. Sorry for the delay. Okay. Good. So here's the same information that we just had. I just replicated it so that I don't have to keep going back and forth. And since some of you are probably going to access this Google Doc at some point, you'll also have a question right there. So we're being asked again to use the periodic method to calculate cost of goods sold and ending inventory using FIFO, LIFO, and average cost. So I'm going to just, I'm gonna just work through this systematically, starting with periodic, and we're gonna do FIFO. Now I know when you did this work, like in Accounting 1 or wherever else you may have seen it, I think it's only Accounting 1, you may have done these calculations in a different order, or you may have your own little special ways that you do it. That's fine. I mean, as long as, you know, when you're answering the question, you're getting to the same answer that I am, that's fine. I'm just going to work it in a way that hopefully helps those people that may still have some difficulties around this to be able to follow it more clearly. So again, if you know FIFO, LIFO, average cost like the back of your hand, just be patient, because I want to make sure that that everybody is on board. So I'm going to start, and again, sometimes the book will start with ending inventory, but I'm going to start by calculating cost of goods sold, because the description of first in, first out is really relating to how things are sold. And sometimes it's easier to see the method work by looking at the sales first before looking at the ending inventory. So what I'm doing is I'm going to create some columns with dates, the number of units, the unit cost, and total. So it's kind of like a tabular approach to it, right? So for cost of goods sold, we know that, excuse me, we know that 6,500 units were sold, but we don't know what the unit cost is, right? It just tells you that they were sold. And the reason is that you basically, the question is testing to make sure that you understand that you have to choose the units that go into cost of goods sold. So if we are saying that 6,500 units were sold and under FIFO, the first thing in is the first thing out, that would mean that beginning inventory will be the first units that get sold, right, under the FIFO method. So what I will do is I will say that January the 1st, right, January the 1st, those are the first units that are going to get sold. That's 4,000 units. And the unit cost is $5.50, right? And we are going to have 22,000. And what are we doing? If you got lost there for a second, we're trying to build up to 65 units to show which units were sold under periodic FIFO cost of goods sold. So we're trying to get to 6,500, but we've only taken out 4,000. So we need 2,500 more units. So we just move on to the next date. So January the 17th, there's another 1,000 units at $6 each. So we're going to go 117. There's 1,000 units, excuse me, at $6 each. So it's going to be 6,000, right? Still not enough, because right now I have 5,000 units, but I know that 6,500 was sold. So it must mean that I need an additional 1,500, right? But now I'm stuck because this batch has 3,000 in it. So do I take the entire 3,000? What do you guys think? Or do I only take what I need?
Yes, we need 3,000.
But if you take 3,000, then you're going to end up with 8,000 units over here. Is that the same as what was sold? Let me do this.
No,
It's gonna,
8,000.
I need to get to 6,500 because that's what was sold, right?
Yeah.
I already have 5,000. When I go up here to the 22nd of March, there's 3,000 units available. Should I take all 3,000 or should I only take what I need to get to 6,500?
We have to need the 65,000. So
Yes. So what you should do, to your point, is only take 1,500 out of the 3,000 because you need to get to 6,500. This is normally where people get stuck, okay? Because there's some confusion around, well, there's 3,000 units here. Shouldn't I take all of it? But remember, your aim is to cost out the number of units that were sold, which is only 6,500, right? If I put, so let me make sure that, right, that I have 6,500. I do, right? 65. If I had to put the 3,000 in here, I would come up to 8,000, which is not the number of units that were sold. So I only take a part of the batch from March the 22nd to make up my 6,500 units. Any questions on that one? And it's at $7 per unit. Questions, guys? So 38,500 is the FIFO cost of goods sold for this question. And again, the 1,500 over here, right? We split the batch purchased on March 22nd and only take 1,500 units, as that's all we need to get to the number of units sold, which is 6,500. So that's cost of goods sold. Are you telling me that you have no questions there? I'm shocked. All right. Sorry, I keep doing that because I'm looking for, is there someone by the name of Antora Ghosh on this call? Does anybody know that person? Antora Ghosh?
Yeah, she was in my last class.
Yeah, like she's supposed to be in this class. She hasn't attended any meetings. I know that she did the personal bio, but I've not seen her attend the class at all. And I just wanted to make sure that she wasn't maybe attending under a different name or something. But okay, if no one knows her personally to speak to her, I'll just find her number on via my LaGuardia. Thanks. Okay, so that's FIFO cost of goods sold. And so now we're gonna do FIFO ending inventory. And remember what I said to you, if you prefer to start with ending inventory for your calculations, you're welcome to do that. You don't have to do it this way. I'm doing it this way because sometimes it's just easier if people are struggling with cost flow assumptions to do cost of goods sold first, because the methodology, the way it's named, is talking about the way things are sold, not the way things are left behind. So with FIFO ending inventory, we know based on our previous discussion, right, that the total goods that we had, total goods available for sale was 11,000 units, right? What was sold, this is what the question I was asking at the beginning, is 6,500. So what is left? Oops, sorry, what did I just do now? What is left is, so this is the ending units, right? Ending units is 4,500. So I know that I need to make up 4,500 from the inventory. We know that the inventory from October the 15th was never touched. We didn't sell that. So October the 15th is definitely in the ending inventory. That's 3,000 units at $7.50. Right? But I know that there must still be something else, because that's not enough. I'm supposed to get to 4,500 units, right? So I'm missing units. So if I go to the next item, I remember that in March, we split this batch, right? 1,500 units were sold. They're sold over here. So it must mean that 1,500 units are left for $7 each. So these two that I highlighted in yellow are part of the same batch, but half the batch was sold and half the batch was left behind. And I mean, you've seen it. If you've ever gone into a supermarket, you've seen, people are unpacking the pallet, and as they're unpacking the pallet, customers are coming and taking things, and those things are being sold that day. And then whatever is left on the shelf is part of ending inventory. If that day happens to be, the last day of the year, the fiscal or the calendar year, depending on which one they follow. So so it's possible that one batch, some of it is sold and some of it is left behind. So that's the FIFO ending inventory. This amount is 33,000, and this goes to the balance sheet. Ending inventory goes to the balance sheet, and obviously cost of goods sold is going to the income statement. Any questions on periodic FIFO before we do periodic LIFO?
Professor.
Yeah.
Can you repeat again, please? I'm sorry.
Repeat what?
The first one, FIFO, ending inventory.
Mhm. So if you go back to look at the theory, right, for FIFO, to remind yourself, the ending inventory for FIFO is going to be the most recent purchases. So it's going to be the latest dates. You're looking for things that were not sold. Okay. So what I did was when I started ending inventory, I went back up to the list of items and I said, what hasn't been sold? I know for sure that the 3,000 from October the 15th wasn't sold because it doesn't show up anywhere under cost of goods sold. So I know that whole amount is part of ending inventory. I also know that ending inventory has to be 4,500 because the total number of units was 11,000. What was sold is 6,500. So ending inventory units has to be 4,500. So 4,500 is what I'm looking for, but so far I only have 3,000. That must mean that I'm still needing 1,500 units. So then, sorry. So then the next question is, where are those 1,500 units? Because we know from the theory that the FIFO ending inventory is always going to be the latest units, I just move to the next one, right, in the list. I move up like this and I say, okay, well then it must be from March the 22nd, but I'm not going to take the entire 3,000. Why? Because I only need 1,500, and also because I know that 1,500 of that 3,000 was already sold. Something cannot be sold and be in ending inventory at the same time. So these two things together make up the 3,000 units that we bought on March the 22nd, but 1,500 of those units were sold and 1,500 of those units remain to make up the 4,500 ending inventory units that we are trying to price out. And we always just use the price that was already established above, right? $7.50 and $7. I'm pulling from the table above.
Thank you, Professor.
It's okay?
Yeah.
How do I check my work? I say the number of units that were sold and the number of units that are left together should give me 11,000, which is the total number of units that were available to be sold. And that is correct. I've done that correctly. Furthermore, if I add up the total cost of goods sold and the total ending inventory, that should give me the total cost of goods available for sale of 71,500. And that is in fact the case, right? So I can also check my work to make sure that I didn't forget something or double count something because I'm ending on the correct numbers. You have a finite amount of inventory to work with. So however you cost it out between cost of goods sold and ending inventory, those numbers together have to come back to the same amount that you started with. Okay, you can't create inventory while you are doing the costing, the cost of goods sold and ending inventory. The number is static. Okay, so that's why you can check your work. There's also shortcuts if you are so moved, right? If the total cost of goods available for sale, right, from the question is 71,500, you could subtract cost of goods sold from the 38,500. So you just calculate that number and then you will come up with ending inventory automatically, right? So you don't actually have to go through the whole process of calculating ending inventory from scratch. If you prefer to calculate ending inventory first, then the shortcut becomes total cost of goods available for sale minus the ending inventory, of 33,000 is going to give you cost of goods sold. So either way, if you wanted to, depending on how, the question asks you to do it. I think in McGraw-Hill, it's kind of asking you to go through the motions, of filling out the thing this way. But nevertheless, I just wanted to show you that if you calculate one of these, you would be able to get to the other answer if you know what the total cost of goods available for sale is, because both of these numbers, cost of goods sold and ending inventory, have to add back up to total cost of goods available for sale, right? So that's a potential shortcut, even if you just want to check your work. All right. So I'll move on to LIFO, cost of goods sold. And it's the same idea, just make it kind of a tabular format so that we can just keep track of what we're thinking. So if it's cost of goods sold under LIFO, the number of units sold doesn't change. It's still 6,500. We're just changing which units we consider to be sold and which units we consider to remain, right? So when it's LIFO, the last thing in is the first thing out. That means that we have to look for cost of goods sold starting with October the 15th, because the last thing to be bought is the first thing to be sold. So it's cost of goods sold. The first date is going to be October the 15th, and there we had 3,000 units at $7.50 each. That's the first thing that we consider to be sold, the latest date, right? Because we're doing LIFO. So it's very different because under FIFO, we started with the earliest date, which was the beginning inventory. So we have 3,000, sorry, we have 3,000 units, but we're not done yet. Remember, we have to get up to 6,500 because that's the total number of units sold. So I still need to fill in some gaps here. I need another 3,500 units. So I've already considered October the 15th to be sold. So I move up. Okay, yes, March the 22nd, another 3,000 units. So I'm going to add that to the cost of goods sold. So it's March 22nd, 3,000 units at $7 per unit. Right? Still not done because now I have a total of 6,000, but I need 6,500, which means I need to move up to the next date, right? To see which units were sold. So the next date is January the 17th. I'm only going to take 500 units out of this batch of 1,000 because I only need 500 units to get to my total number of units sold. So it's going to be 500 units at $6 each. So this is January the 17th. 500 units at $6 each. Oops, sorry. So that's 3,000. And now I can add up my situation over here. So I'm coming out to $46,500 for cost of goods sold. Immediately, you should notice that the cost of goods sold under LIFO is much higher than under FIFO, right? FIFO was 38,500. This is 46,500. And the reason for that is, as you can imagine, we're considering the latest units to be sold, which means that the prices are higher because we could see that the prices were increasing as the dates were getting later. So this is going to go to the income statement. Okay, so just like we saw when we were reading the notes under LIFO, the cost of goods sold on the income statement is higher, which means that the net income is lower, which will then also result in lower income taxes, right? The less income you have, the less tax you pay. So we see it playing out over here. Questions on LIFO cost of goods sold?
No question.
Okay, one person. No chat questions. Okay, so if there are questions, ask them in the chat or just stop me. So now we do LIFO ending inventory. Now you can already imagine what's going to happen with the ending inventory because we're only going to look at things that have not yet been sold, okay? So you can't suddenly start including the things, sorry, what happened here? This is supposed to be October. There was a typo. That's supposed to be October. You can't include things that have already been sold, right, in your ending inventory. With LIFO, it's the earliest dates that are going to be left over, right? Because those are the first things. So we already know that the beginning inventory was never sold under LIFO. So you can put January the 1st as your first item under ending inventory. You know for sure, right? That it wasn't sold. It's 4,000 units at $5.50 each. 22,000. So we have a problem because we know that the number of units left is not 4,000, but 4,500. I know this from the calculations we did before, which means that we're not done. We still need another 500 units. And you can probably tell me, because you remember that on January the 17th, we took 500 units from a batch of 1,000 and we left behind the other 500 units. So that's where 500 units will come from for ending inventory. They come from January the 17th. That's a split batch. And so it's 500 units at 6. And I'm just checking that I'm doing the right math here. At $6 each. And so our ending inventory is 25,000. All right, and so these two again were part of the same batch, but the batch got split between cost of goods sold and ending inventory. We check our work. Do the units add up to 11,000? Yes, they do, which means we have costed out everything that was available to be sold. Check our work on the dollar amounts. Do the dollar amounts for cost of goods sold and ending inventory add up to 71,500? They do. So that means that we have costed out all of what was available for sale. This 25,000 is going to go to the balance sheet. So you can see, again, like we said before, under LIFO, the balance sheet is carrying the old units at lower prices. So your assets are less on the balance sheet. Your cost of goods sold is higher on the income statement, which means that your net income is lower and thereby your taxes are also lower. And if you scroll up, you can see how the FIFO ending inventory is much higher than LIFO because FIFO ending inventory is at current prices because it's the latest units that are included in FIFO's ending inventory. So I'll go again, raise your hand or just call out or just type in the chat if you have questions, but if not, I'll just push us a little bit. I know we're getting close to the end of class to do the average cost. It's not going to be, it's actually going to be much easier than FIFO and LIFO. Sometimes when I've taught FIFO and LIFO, especially in accounting 1, people get confused and think that average cost is somehow like related to LIFO and FIFO, like you have to use your LIFO and FIFO numbers to come up with average cost. That's not the case. The way the average cost works is that you calculate the weighted average cost of one unit and then apply that cost to the units that are sold and the units that are left. And the formula for the weighted average unit cost, which we saw in our notes, is that you take the total cost of goods available for sale and you divide that by the number of units available for sale. And when we look at our table, sometimes this is given to you in a table, sometimes you have to calculate it, but we already have the numbers here. I should have probably opened this long ago. 71,500 is the total cost of goods available for sale. 11,000 is the total number of units available for sale. So we're going to go 71,500 divided by 11,000 units, right? That's the math on this. And if you forgot what we're doing, we're just trying to figure out what is the average cost of one unit of this inventory. So it's going to be $6.50 per unit. That's not the answer. You're still supposed to be calculating ending inventory and cost of goods sold, right? So you haven't actually finished your work. for cost of goods sold, you are going to say, what is the number of units sold multiplied by the weighted average unit cost? That's the formula. So the number of units sold is given in the question at 6,500. We've been working with this number all along. You multiply that by $6.50 per unit, and that's going to give you an average cost of goods sold of $42,250. Does anybody have questions on the math that I just did here? So what we notice is that 38,500 is FIFO, cost of goods sold, 46,500 is LIFO, and your average cost, as the name implies, that number ends up in the middle between them, right, at 42,250. But that doesn't mean that you average out the FIFO and LIFO number to get to average cost. That's not what you do. You have to go through this process of coming up with a weighted average cost per unit. And then your ending inventory, again, you know, the formula is pretty obvious. It's going to be the number of units left multiplied by the weighted average unit cost. And so the number of units left, as previously calculated by you guys, is 4,500 units multiplied by $6.50, which is the weighted average cost per unit, is going to give me 29,250 as my ending inventory. And again, if you look at ending inventory for FIFO, it's 33,000. If you look at LIFO, it's 25,000. So once again, the average cost is in the middle. Remember, I told you that average cost is easier to calculate, but it's, you know, not necessarily as accurate. So it kind of just gives you numbers that end up in the middle of the other two methodologies. And when you add these two numbers together, you see that it comes out to 71,500, which is the total cost of goods available for sale. And when you add the units, it should also come out to 11,000, which is the total number of units available for sale. And so that is average cost under all of these are under the periodic method. All right. Next time we will do the perpetual method, and you know, I've gone out of Connect now. Let me see if I can just. I went out because we were running around with all these login issues, but I just wanted to see if I can just quickly go into the textbook and show you, for those who do have access to the textbook already. Let me see. Get rid of this. I have so many little screens and things up that it's sometimes difficult to navigate. So this is what we're talking about, right? I just did this. This is from the textbook. If you somehow lose sight of the Google Doc, or you don't know what's happening, or you just want to use the textbook, solely use the textbook. This stuff is all in the textbook. I'm taking it from there. That's where we finished. For perpetual, for the people who want to read ahead and are worried that, you know, they don't know, they want to be ready for next time. The perpetual work is right here. It's a little bit more involved. I'm not going to lie. Okay. So come ready next time to do these calculations. Remember, when we do the perpetual method, you have to calculate a moving average for average cost, which means every time we buy inventory, we have to calculate a new weighted average cost. So that's, so that gets a little bit crazy. But we'll work through it together, and it will become very obvious how to do that. And then let me see if I can find the perpetual LIFO here. Well, perpetual FIFO, I can show you, but the numbers for perpetual and periodic for FIFO will end up being exactly the same. You can see that already just from this screen. And then LIFO, we just did the periodic LIFO. Those are the same numbers we just ended on. The perpetual LIFO is where we'll spend some time next time, because this again, oh no, what is wrong with this? Sorry guys, I have this issue with the touchpad. So the perpetual LIFO requires us to every time there's a sale, we are looking just at the last thing, the last inventory that was purchased to be used in that sale. So we kind of have to set up a table that gets a little bit more involved in order to make sure we're tracking these numbers. So I'm telling you this because I just want to make sure that you are aware that next time we're going to be doing, some fairly rigorous calculations. And it seems that I am doomed with this cursor, or I'm cursed by this cursor that doesn't want to move. To be able to show you also that next time we'll do dollar value LIFO. Sorry, I'm just actually going to switch off my thing and switch it back on again. All right. So let me stop the share and stop the recording as well.